Good afternoon, everyone. My name is Brett Hazlett. I'm a director in the advisory group. Spent a bunch of time in my career in industry, so in most of your shoes. More recently, doing some economic development work and working with small businesses. And here at BPM, I've been working with the group on the panel today, really leading our internal efforts on understanding the CARES Act, and most specifically the loan aspects and how to implement those and what the impacts are for businesses. So looking forward to updating you guys on that today and answering any questions you may have. As many of you have heard, and some of you have been lucky enough to have squeaked through and received loans, we know we've talked with several of you, but unfortunately, at the end of last week, both the Paycheck Protection Program and the Economic Injury Disaster Loan Program, which are the two primary SBA lending programs for the COVID-19 pandemic, ran out of money. So last Thursday, they announced that they had run out of money. Congress was already working on sort of next steps in advance of that, but didn't get them funded in time. However, yesterday, the Senate picked up the legislation and approved it. It looks like the House is slated to do the same tomorrow, which means we'll likely have an approval from the White House by end of day or beginning of day Friday. What that means for those programs specifically, for the Paycheck Protection Program, it's $310 billion additional in total, 250 of which is going into the program basically just to backstop what was already put in place. And then an additional $60 billion has been allocated specifically for banks with smaller capitalizations in an effort to get those funds in the hands of the truly small businesses, minority-owned businesses, women-owned businesses, tribal-owned businesses, etc. So there's a little bit, they've sort of gone down two paths there, but the 250 will go in immediately and with applications still waiting, should begin being processed almost instantaneously. On the Economic Injury Disaster Loan Program, that also was given additional funding, an additional $50 billion. On that program, the SBA stopped taking applications. So there isn't a queue of applications like there are with the banks on the Paycheck Protection Program. So in this case, when that gets approved by the White House, in theory, the SBA will immediately turn their application program back on. So if you're looking for one of those loans, you'll want to be on the lookout for late tomorrow afternoon, possibly Friday morning when the White House passes it, and be monitoring how quickly the SBA turns that back on. And then the one other update that we have under the original CARES Act, so at the end of last month that was passed, there was a Main Street lending program alluded to. And again, they've obviously been focused on the smaller businesses, but they're now starting to release some additional information on this. This program was for any business less than 10,000 employees. So it includes both those between 0 and 500, as well as those up to 10,000. Still working on the details. They expect it to be running by the end of April. So Treasury has been issuing guidance and they're working with the banks to sort of finalize that program. What we do know is those will be 4-year loans. The minimum loan amount is $1 million. So again, even though it in theory applies to small businesses, for some, the minimum loan size will keep them out of qualification. So keep that in mind. Interest rates are relatively low, below market rate. So that's, again, an attractive feature here, but they're not forgivable like the PPP program. And then amortization is deferred for 1 year. So principal will continue to accrue, and then amortization will happen over the final 3 years, but the details have not yet been clarified on exactly what that will look like.
So Brett, let me fire just a quick question for you. Can businesses apply for both PPP and EIDL, or I guess it's called EIDL?
Yes, they can, Edward. That's a great question. However, there are some restrictions. So the funds that you would get under an EIDL loan would need to be used for purposes different than what the Paycheck Protection Program loan is for. So given that the Paycheck Protection Program is almost entirely payroll, you're really going to be looking at using an EIDL loan for something other than that. So it could be, inventory purchases. It could be, payment of accounts payable, et cetera. But they need to be at separate purposes. And so keeping the accounting square on that would be a really critical part. So you can do it, but you want to be, really clear on what you're using the various funds for.
There are a number of questions that are coming in regarding eligibility. Can you review what is the guidance currently saying about nonprofits? Has there been anything further to help people understand who qualifies and who doesn't?
Yeah, so for nonprofits specifically, under the original CARES Act, it was limited primarily to just 501c3 organizations, as well as tribal organizations. In reviewing the language of the bill that passed the Senate, they did not update any of that language. They basically just amended the prior bill to change the dollar amount to increase the authorized funding. So it does not appear that they have made any changes to the requirements as they were originally defined in the law.
So if there's somebody out there that is a nonprofit which is organized differently than a 501c3, would you advise them to make application?
Again, I think it's pretty clear that they are not allowed. Again, it doesn't, the bank can shut that down quickly, but the application only allows you to select 501c3. So if you are a C6 or a C7, again, the application makes it pretty clear that it's not even, you're not even eligible. So I think it would be, you would stop with the bank pretty quickly. So that leaves your options as an EIDL loan, the option to defer payment of payroll taxes, and if you're eligible, the employee retention tax credits. I think those are the routes I would recommend folks go down, Edward. I just think it's pretty clear that they haven't changed the guidelines from the original law, and so any C6, C7, or other organizations would not be eligible.
Good, thank you. Brett, and maybe Terry, you'll have an opinion on this one too. Are there arguments out there regarding how loan forgiveness is recorded? Is it to be treated as income under PPP? How would it get treated in terms of offset for the costs that it covers?
Obviously, when you receive the loan, it's recorded as a liability. Once you apply for forgiveness and the bank confirms the amount, that amount plus the accrued interest on the loan would be considered income from an accounting books perspective. So they haven't defined, clearly. It's most likely going to be an other income type of item rather than a revenue item, but it will be other income of some sort. And from a tax books perspective, recall though that this loan is not taxable. The income for the forgiveness is not considered taxable income. So on your tax books, it will not show up as income.
Question comes, what is the best way to receive 100% forgiveness of the PPP loan? If I've already laid off employees and I can't take them back, because of county mandates and people can't go to work. How do I handle that? What might be a reasonable response?
I guess the best answer that we can give is that you are obviously allowed to pay employees whether they are working or not. So under this program, the government's intention is that even if your employees are not able to be physically at work, you could pay them, which obviously keeps them, off of unemployment and other government programs. So that's really the only way under the way they've defined the law now, because the 8 weeks gets triggered on your funding date. So really the only way to attempt to get full forgiveness is to bring back your workforce for that time period, pay them as they would have been paid during your 2019 qualification period, and then obviously communicate with them that they need to let their state and local unemployment offices know that they've gone off of unemployment for that time period if any of them have gone on.
Mm-hmm. I think one of the reasons why that's such an important question is that we're talking about economic recovery now, and what are the steps that we may be able to take to ensure it. But ultimately, this is a people issue. And what's happened has impacted individuals dramatically. And PPP is a plan which is really designed to put money in people's pockets so that they can pay their own rent and put food on their tables. And so with that in mind, it's a bridge to get businesses to a place where they can open back up. And so absolutely, this thing has been designed so you can pay people who aren't showing up. So if somebody has spent all of their loan proceeds by the end of June on eligible items, what happens? Do they have, if their payroll is paying out at the same amount, what might come next for them? Would you anticipate there will be a next round? Will there be subsequent tranches to this? How do we deal with this?
Yeah, it does appear, by their own definition of how they've described the bill that was passed yesterday by the Senate as an interim measure. So it does appear that, Congress is at least gearing up for the possibility that additional funding will be required. What that looks like, again, is anyone's guess. It's likely to include, if they go that path, it's likely to include, paychecks directly to people again, as the original CARES Act did, and things like that. What it means specifically for businesses, I think would only be speculation at this point.
Okay. Regarding EIDL and PPP, if you have exhausted your PPP funds for payroll, can EIDL funds be used?
Yeah, it's a great question. I think the law is unfortunately not clear, and it's probably one of those things that we'll get some guidance on. Conceptually, you could certainly make an argument that you're using the PPP funds for the 8-week period and the EIDL after that. However, as the law has defined it currently, it says that it needs to be used for different, expense types, basically. So that would sort of lead you down the path of it's not going to qualify, even if it's outside the window. So I think it's something that will likely be clarified, and so you just need to be careful about how you think about that up until that point.
What qualifies as expenses? Beyond utilities like PG&E, might it also include cloud-based subscriptions, for example? What kind of insight do you have on that?
Sure, great question. So let's hit all of the expenses just quickly. So payroll costs are of course included using the same definition that you use for your loan forgiveness amount calculation. So that includes health benefits, retirement benefits, state and local taxes, and it of course includes the cap on highly paid employees, those over $100,000. It also includes mortgage interest, so not full mortgage payments, but the interest portion of your mortgage payments. Any rent payments, which at this point we believe include both real estate as well as any equipment loans. And then finally on utilities, they've actually given us a fair amount of specificity there. So it includes electric, gas, water, telephone, and internet access. Getting good documentation in place as we think about loan forgiveness is really critical, like Terry said, planning out what that looks like, et cetera. So there's that piece, really being able to evidence both what was the expense, how much was it, and then being able to show that you actually paid that same amount is going to be critical. More importantly, I would say is, thinking about how to plan going forward, knowing that that's going to be there, but also how to be flexible in the short term because we don't know all the rules yet. So don't get yourself, too far out ahead until you're really clear on this. So stay really close to the guidance from the SBA. We expect that to come down in the next week or two. Again, there's a lot of detailed questions that we didn't get to, and I think there will be more information coming out on those. So feel free to reach out to us, use us as a resource. The SBA and Treasury have done a good job of keeping Q&As up to date on their website as well. And so, bringing back folks is going to, make sense, but make sure that we're going to understand how that works with loan forgiveness over the next week or two will be really critical. So both long-term thinking as well as short-term being flexible to what guidance the SBA issues will be really important.